Before you buy the next house, you must watch and listen to and hear from this loan officer next. Hello, everyone. Nasser Qureshi, Realtor Daddy, on Wisdom Wednesday TV talk show, bringing you another important topic. We can hear not enough, never enough about mortgages because, hello, Mr. Ansari, Mr. Shawn, how you doing, sir?
Hey, I'm doing good. How about you?
Fantastic. Thank you for being with us on our TV show. So tell our audience, who is Shawn? Where are you from? What do you do?
Hey, everyone. My name is Shawn Ansari. People know me by Shawn, but my real name is Shri, and I'm an investor. I'm working with ResCom Funding Incorporation with a partner called Houston Home Loan. So they are the parent company, and I am in this business for about like 12 years. I'm having an experience for about 12 years in the mortgage industry. Basically, that's about me.
Okay. So you help people to get mortgages, loans, correct?
That is correct. Basically, we are having multiple loan programs. Basically, we do FHA loans, conventional veteran loans, and we also have a non-prime lending. We do DSCR, debt service coverage ratio. And we also have a bank statement loan programs. Then we have investor loans like a foreign investment loan. So we are specialized normal lending and non-QM lending.
Okay. What is non-prime lending?
So basically, non-prime lending, it's a no income documentation loan, which includes they are like a separate loan program wherein like basically if a borrower is not qualifying for a normal lending, they can go for a non-prime lending. Which we don't need basically an income documents to qualify for the loan. So non-prime lending includes DSCR loans, bank statement loans, and profit and loss statement loans. So
What
these are the
is
documents required to qualify for a non-prime lending.
what is the credit score that you can work with? Minimum credit.
First time home buyer, we have a lender who can go as low as 500 credit score.
Okay. Down payment assistance. What is it? Do you recommend it or not? Why yes, why not?
Down payment assistance, basically, it's a assistance which we get it from, there are two type of assistance, one from the county and second from the lender. So from the county, we don't do it, but from the lender, there is an assistant. So basically, a borrower can get up to approximately 3.5% assistance from the lender. And it's basically a second lien to, so there will be a second mortgage. And basically, the requirement for the credit score is low as like 580. We have a lender who can help and get qualified for a down payment assistant borrower.
Let's say somebody from another country, let's say just an example, somebody from France has a lot of money. They just want to buy a property. They don't want to live here. They want to invest. They want to buy a property. Can you give them a loan?
Definitely, yes. It's a foreign investor loan program. So we have that option available. We can, if anyone, it's not like if a person is in France and they wanted to invest in US, like all over the world, like if a person is staying outside US and they wanted to invest in US, they can do it. So it's called a foreign investor loan. They can qualify for it.
What percentage of down payment such an investor is looking for?
So down payment,
Approximately, not exactly. We're talking about 20%, 25%, 30, 40%. What we're looking at.
the down payment is concerned, basically the lender will require a 30% down payment for a foreign investor loan program.
Okay, 30%.
No income needed, no documents needed.
And in terms of people in the US, can you help anyone in Texas? Are you limited to a state, or what states do you cover?
Basically, if you are talking about a traditional lending, it's like conventional, like FHA, and
Correct.
we have a license to do in 3 states, which is like in Texas, California, and Florida. These are the 3 states we have a license, but the option is open in a non-prime lending. So basically, non-prime lending, like only the investment property we can do all over 50 states. Can
Only
be
on
done.
investment.
Yeah.
Okay. And so primary residence in 3 states, investment all over the US, correct?
With the regular lending, we can do investment in 3 states too.
Okay.
I am talking about other option like whether a person is not, a borrower is not qualifying for a loan with his income. He have another option. He can go for a non-prime lending, which the option is open. in all the 50 states. We can do
If
a non-prime lender, a non in all.
if a family in Dallas, Texas, for example, thinking about buying a house 2026.
I mean, in 2026, I mean, I'm not sure whether you guys are not familiar. Like I mean, the best thing is the interest rate has dropped. So this is the best time. I mean, I would suggest you to the client to go and hunt for a property.
Let's say the average house, $350 to $400,000 to easy math. Let's say they want to buy a house, $400,000 house, first time home buyers, sometime in this year. So good time to buy. We got it. But what preparation they should do to buy the house? Should they save up some money? Are they expecting some money to pay at the closing? I know we have home inspection, about $600-700 for that. We have appraisal for the fees that a lender appraiser or third party appraise whether the house is worth off the loan or not. About a $600-700 for that. Some taxes. What can you tell them? Hey, Mr. Buyer, soon to be a buyer, start preparing now. What are those preparations that you suggest to those such a family, please?
Basically, I would first suggest to get them pre-approved. First, check whether they are getting approved or not, because that is the main and the important step before buying the property. So they should first get them pre-approved. And regarding the down payment is concerned, like we have a lender, like they can go as low as 1% down payment and plus the closing cost. So every lender require a closing cost, and there are some lenders where like they basically give a credit to the buyer as well. So which helps them to get the closing cost lower.
Could you elaborate a little bit about the on the closing cost, please, if you can?
I can give you an estimate. It's about like $1,000, close to like that, $1,100. So I would say basically for a property worth around $400,000, that there might be a closing cost of approximately $4,000 to $5,000, including the title fees as well.
Okay.
That's gonna be an average estimate for the closing
Okay.
cost.
And what do you say to the people that they get super excited? They want to go see the house first. They say, oh, let me go look at the house first. If I like that one, then I'm going to go get pre qualified. So, is it first, in your professional opinion, is it a good idea to get pre qualified first, then go for house hunting, or house hunting first and then get pre qualified? And second scenario, house can slip up to the next buyer.
Would never suggest for that.
I tell to the people, I say, it's like, when you're going for house hunting without approval is pre-approval. It's like going for deer hunting in the jungle. And when you find the deer, you tell the deer, excuse me, Mr. Deer, stay right there. Don't move. I'll be right back. Because the house can slip up, the house can slip up. They're not the only buyer in entire Texas looking at that. Or maybe not. And then with the loan process and mortgage process, it takes some time. Of course, it has a lot to do with how much cooperation you and you and a realtor getting with a client. If the prospect client is very cooperative with a loan officer going to work and get them qualified fast. So is the real estate agent. And so a lot, they don't realize that, right? So what is best way to contact you?
I mean, the best way to contact me, I mean, I can give my contact information, an email address, or they can WhatsApp. I can talk 24/7.
What's your phone number?
It's gonna be 832-397-6567. My cell.
Fantastic.
I mean, any client of yours or anyone who is looking, for a refinance, they can contact me on this number or contact me.
How long or a new homeowner should be a new homeowner before they can refinance?
Can you come up again, please?
How soon a homeowner can refinance?
There is no limitation.
Let's say, let me rephrase this. Let me put that in a scenario. A family buyer bought a house this month, okay? Based on their personal circumstances, they know they did not get for some reason, they did not get a good deal. But they're thinking and they want to think and they do want to finance down the road, okay? What is that down the road? Do you recommend 6 months, a year, 2 years? What are the recommendations that they can refinance and how long and why?
I completely, I understand your question. So there's a title seasoning of, let's say, 3 months. They have to wait for 3 months, and after 3 months, they can refinance anytime. And I would suggest, like, once the interest rate goes down further, they can refinance anytime with any lender. It's not about us, it's with every lender they can,
Okay.
but for 3 months, they can refinance.
Across some statistics that in COVID pandemic era where the interest rates were all-time low,
That's correct.
but 61% of homeowners in the United States did not refinance at that time. Can you imagine? 61% of the homeowners
It's a huge
in
number.
America did not refinance the home, and interest rates were like 2% at that time. One
Correct.
point something they did
One
not because
1.75, I believe.
yeah,
I have many of my borrowers with 1.75% on a
ex-
15-year fixed.
unbelievable. And 61% did not refinance because just it could be lack of information, lack of urgency, a lack of understanding. And I say that the way our human nature is when things are on autopilot payment bills, like our electricity bill, cell phone bill, mortgage bill, we're not really worried about that, until it becomes a problem, until our phone shuts down, or electricity shut down, or we get a foreclosure notice. That's when we start getting worried about that. So, what are you expecting about interest rates? Into I know you talked a little bit about it, but I want to dig a little bit deeper. What can we expect? People are excited. New year, everyone excited. I'm excited. You're excited. What can we expect in 2026 when it comes to interest rates?
If you check the trend for the last year, I'm not sure whether you know about it or not. The average rates, which was last year, it was like about 7%, 7.5%. But from December, I'm sorry, not from December, but from November, the trend is going downward. So the interest rates is going down. And right now, the average rates are about in the range of 6.5 on a 30-year loan. And 15 years, like it's about 5.5, 5.25 in that range. So the interest rates are dropping and it is expected to go even more down. So hopefully we will see an interest rate of about like 5% in that range on a 30-year mortgage. Hopefully.
No, do you live in Texas or some another
No,
state?
I am currently in Mumbai. I
Okay.
actually earlier.
Okay.
I'm working for. I'm a virtual assistant basically.
Okay.
So
Do you recommend people to buy a real estate in Texas?
definitely yes.
Why?
It's a big market and it's a big community. I mean, if you check, there are. I mean, the population is more in Texas, and basically this is the market, and the interest rates are lower. And I'm not sure about. I don't know much about it, but I can tell you one thing like that. This is the best market to look for a
It
to
is.
properties in
It is
Texas because it's a big market in Texas.
one place you would like to go on vacation.
So
Okay.
favorite food,
Chicken curry.
one book. I mean, there are multiple, but I didn't recognize the name. What was that name?
Wolf of Wall Street. Okay.
One message. What do I say? What should I say?
Some people say
Don't
like
give up.
be persistent and don't give up.
Thank you so much. It was pleasure talking to you.
Likewise.